Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, August 30th, 2023, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and we are going to take a very brief look this week back on the Russel index that we spent a lot of time last week on the charting session live on. And then we're going to touch on two earnings trades that I put on, one on ticker DG and the other on ticker VSCO. Mostly I just got frustrated with the Russel and said, forget this. There's earnings to be played. Let me go play those earnings. But before we hop to that content, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to Viper, myself, some of the other Blockhead traders. We love to hear what you're trading, love to hear what type of content you want to hear about. You can also find this wherever you get your podcast. And if you look and you can't find it, let us know and we will get it there. Lastly, you can go to thetagang.com/sprocket888 and you can see each and every one of my trades, the good, the bad, and the ugly. But let's hop to this week's content. Viper, the Russel, price action, charting, indexes. I'm still as confused as I was last week. We put some stuff up on there, and I'll switch over to your chart here just to remind you. Just to remind the viewers where we ended up. I'll speak a little bit to it. We're not going to go through any sort of charting exercise here, but it just has reinforced so far the free beer tomorrow. It seems that every time we look at it, we're on the cusp of something, and there's maybe always wishful thinking on my part, trying to see things that are there or not there. I'm in an interesting position because I have a hedge currently on for some options trades that I took out. It happens to be a short on the Russel, and I'm kind of like, when might be the time to take this hedge off and cash in the other option play? And trying to get clarity on where the Russel is headed is something I've been trying to kind of do. And the more I look, the more that the clouds look like clouds. I don't see things in the clouds.
And at some point, your hedge turns into hedge clippers headed straight for you.
Yes. And so let me just flip over to your screen here just to show you where we were at, because the key one, if you want to call it out there, Viper, is this range towards the bottom of this trough. There's two bars where the thing was dipping into. And when we had recorded last week's episode, we're like, ooh, we were at the bottom end of that range. And we're like, this is the moment of truth. We're either going to go higher or lower. And the candle closed in the way that would indicate that we were going higher. And I was like, dang it, that's sad. And then you look now, and we're now bumping up against another level. And, we won't chart it out or anything, but it's kind of those two humps there to the left, and you're like, well, maybe we won't gain those. So the bottom line is, I think I just need more practice at this, and I probably should do more practice with paper trading or just charting with nothing on the line, and kind of remove this the fact that I have a short position open right now on this.
Yeah. Very true. And I definitely it's weird. It's obviously a good thing to bring up from the price action, the charting and everything. Did the whole episode on charting last week to show that there's going to be these, there's going to be these cases where it's just a challenging chart. It's I don't know, comes full circle to me because in the past few days I've had some really good clean charts that I've made some really good clean plays on. But yeah, this one right here is we're just kind of in the mud a little bit. Doesn't mean it's a muddy chart. It just means that the skill level to quickly discern what's happening clearly isn't where we're currently at. Though the one thing I wanted to call out is this is why it's important not to chart mid play when you have a play open. I mean, and that's just one of those like hindsight is 2020 BS things, because but at the same time, so as I understand it, the hedge was a hedge, of this short on an options put. So I don't know what the real lesson is, because these are two mechanics that I don't use a lot. But I mean, it obviously, the one mechanic I'm well aware of is that a short runs out of its hedge very quickly. And so I don't know, like, do you ever, when you're doing this sort of hedge, do you ever consider where the break even is of like, this is my max options gain, and this is this is before entering the player, before the price action has revealed itself? Do you ever consider like, this is my max potential on the option, this is where my hedge overtakes that, let me just put a stop loss on here? Like, does any sort of that mitigation come into play, or is that now a lesson for the future?
Honestly, the lesson here is this hedge had no business being put on. That's honestly the lesson for this play. There's no, the way that I do hedges, or should do hedges, I deviated in this case, and most of the time the hedges that I put on are for my entire portfolio. So it is a portfolio on the delta of my collective aggregate. In this particular case, I deviated from that, and the market was falling hard and premium volatility was going high. And I had looked at the price action and I said, you know what? I really feel like there's a level that might catch this falling thing around the 1830 level of the Russell. And that was a good distance away from when I sold it. I sold this thing when the Russell was trading around 1860. And so I sold a put in 1830 to collect the premium while this thing, like, right, panic was out there in the streets. So the Russell was just, and when that happens, premium goes sky high, and that's like the perfect time to sell it. So I really should have done that the way I do most of those premiums and say, I'm cool with assignment. If I get it, then great. The Russell will come back. I should not have hedged that play. That's the real lesson. I just thought I would get cute and said, oh, you know what? This is real clever. I can go ahead and short this thing, and it's like a covered call, but in reverse, it's like a covered put. And it was just dumb.
I wish I could say I've never been there, but sometimes I feel like I live there.
Yeah. But anyway, I mean, we shouldn't get too hung up here on charting, or the master charter will come after us in the Discord and be like, "What are you guys talking about, man? Let me set you straight." So we'll have to talk with the master charter and maybe get him to school us on a future episode or something like that.
Yeah.
But let's switch to my bread and butter, because this week I was a little bit frustrated with some of that stuff because I wasn't met with as much success that I wanted to be met with. And so I said, what do I know? What do I like to do? You know what? Earnings. Let's see what earnings are out there this week. And so I did a little fishing for earnings, and I had two. I mean, this is really the end of the earnings season, so a lot of the big names are done. And I just looked for my normal screening of volatility. I looked to see, where is the volatility extra elevated, means historically over the past year, what percentile is that volatility? And I actually found two earnings trades where the volatility percentile was over 80%, which means only 20% of the time in the past year has the volatility been lower. And earnings binary events are beautiful events that just will pop volatility and uncertainty really quick. And so if you're in an environment where that is already super stretched, you can sell options in there and you can get them quite a bit distance away from the strikes, and you will get an options or a volatility crush typically the day after earnings. And so I just want to take you to two of the trades that I put on this week for earnings. Now, the first one I want to bring up is DG. And DG, this one I actually did a little bit of charting on. So not super in depth, but whenever I go to sell premium, I want to say, okay, what's realistic kind of levels that this thing might bump against? Because one of the things that Viper and I have always experienced when we go to these binary events is they are a massive accelerator for price action. So think of like price action on speed, what normally might take a week, 2 weeks, a month to do. These things will cover in a minute, 2 minutes, 10 minutes on their price action chart. And so what I got pulled up here is the DG trade. And the interesting thing about this is if I kind of zoom in just a little bit here, I've got some purple lines here, which is a monthly level that going back in time, it was one of the, I used the methodology that we talked about last week in wrapping a candle around the failures to see where that level might be. And then I went ahead and then took some look at some weeklies and said, okay, where are the weeklies at? And I actually put some blue lines down here for the weeklies. The interesting thing that I see here is that when I entered this trade on August 29th, we were really kind of bumping up against this monthly level. So that might be a good indication that we might defend it. If we might crash through it, likely we might get caught on the bottom end of that. We might get caught down here on the weekly. And so ironically, I try to target about a 16 to 18 delta strike on my options. So it gives me about a 80% or 70 to 80% probability of success. And that strike was right here at the 142 level, really close to this weekly line. So that helped me feel a little better. This overall DG stock is on a downtrend. And so, if we're talking about accelerators, the likelihood of accelerating this to the downside is very probabilistic from earnings because that's the overall trend. And we got a couple levels that might catch it. On the upside, we got this big gap down. We got a couple of times that's kind of running up there. Anyway, I was able to sell this premium out there for a couple $100. You can see the earnings actually came out. They come out tomorrow morning before the bell. This thing actually expires Friday. I'm very, very comfortable, especially because I can roll these things forward to the future time after the vol crush. But you can see right now we're Flappy Birding right down the middle here. And that's just looking nice.
Good old Flappy Bird. You are progressing to the next level easily on Flappy Bird.
Yep. We'll get the earnings announcement out in the morning. We'll get a bunch of jumping around probably in the beginning of the day, but hopefully we'll ping pong here between these levels and that volatility will crush and this one will ring by the afternoon.
Yeah. And I mean, nothing's guaranteed, but going into such an event, this is it's been a while since I've done earnings plays, but this is like prime real estate to be right in the middle there, because what we've definitely seen when you look at any chart during an earnings event is that high volatility, and it very rarely, so again, speaking to the probability of your success and whatnot, it very rarely seems to close and hold either extreme. Obviously it can happen, but generally you get, like you said, the ping pong around, and then, it still maybe starts to trend up or down, but sitting right there in the middle of that channel is certainly a great place to be.
So the other trade that I took was VSCO. So again, this is another 80% implied volatility historical percentile. And the one thing I want to note here is the price of the option relative to its volatility is not linear. So if you go from something that's like, say, a 40% historical volatility to an 80% volatility, it's not a straight line between those as far as an increase in price. It's very exponential, actually. So when you really get these stretched things, the premium that you collect is much, much thicker when you get to that upper end of that historical IV percentile. And so both of these were in excess of 80%, which is relatively rare right now, where a lot of the market volatility is relatively tame to some of the times in the past. But these were right there. So let's flip over here to VSCO. Now, If you actually zoomed out and looked at VSCO on a much wider time scale, there's really nothing to chart price action wise below here because this is all-time lows. So this thing is on a massive downtrend, already at kind of all-time lows. So there's really no levels below here. So I guess that's what Viper calls we're in price discovery mode. So this play, there's really no safety net, let's call it, that I was able to put with previous levels or things like that, where there's a probability of reaction or things like that, because quite frankly, there's really nothing below here. And this was strictly a play on that volatility crush. So I took it. This one, the options actually didn't have weekly options, so I had to go with the monthly. So this actually goes till September 15th. There was no options prior to that. The ones on DG actually expired this Friday. However, VSCO actually announced after the bell today. So they actually already put their earnings out, and it went nowhere. So I don't even know if the earnings were good or bad or what have you. I didn't even read it. All I saw was there was no after-hours price action movement at all. So I'm feeling that this one is pretty good. Likely the play here is I'll wait for the volatility crush in the morning. Probably sometime after lunch, I'll just cash out at whatever I can scoop up from a volatility standpoint. I really don't want to ride this thing out to the second week there in September at the expiration because, this is a massive downward trend. Really don't want to hold VSCO, to be honest. I guess it's not a terribly expensive stock as far as sticker price. So these are the earnings trades that I threw on this week.
So what was the IV again on the VSCO going into it?
So it was definitely over an 80% historical volatility. Actually, if we just check real quick on what the spot volatility was, because it won't have been updated yet, because you don't get the updated measures until the market opens, and then they start trading. So it was at 92% for September expiration in volatility.
Okay. So even if the after hours action is non-existent, you still expect a significant volatility crush.
I do, because if you look out to the October, December, January monthly options, the spot price on those IV implied volatility is about 60 to 65%.
Okay.
So there's at least a 30%, fluff just because this is earnings.
Okay.
And like I said, that volatility percentile is not linear. It's very much exponential. And so I would expect very decent contraction, particularly because what happens is your strikes are out of the money, like pretty far out of the money. And when volatility collapses, the premium, especially on the edges of out of the money, just vaporize. When you're close to at the money, you really don't get a ton of premium fluctuation on that IV. I mean, it's there, but it's way more pronounced the farther away from the money you get. And these strikes were basically the expected move on this thing was like $3, I think. So I was able to put my strikes about $3 out. The standard deviation is about $3 out from where it was trading. And so I expect those will be very far out of the money once volatility starts coming in.
Okay.
So that brings us to the end of this week's episode. Pretty short episode this week. I'm going to keep going back to practicing some of that price action and drawing levels and things like that, because I am pretty fascinated. It's really cool, particularly in our Discord, when you watch some of the charting that gets up there and people put these, hey, I'm going to swing trade this, and they'll call out looking for this, and then they'll enter when it hits their targets, and it's really neat to see the price action react the way that they're kind of laying it out there. My practice is definitely not to that level, not even close. Like I said, my bread and butter is kind of options premium selling, and so that's where I reverted back to my happy place this week when I was being sad with indexes. And we'll see how that pans out with DG and VSCO. So far, they're looking pretty good. VSCO looks like we'll nail that one, and be excited tomorrow morning to see what happens with DG. That was the other thing I should mention, I guess, a little bit about DG is that one. I'm actually pretty okay owning DG. It's one of those consumer staples that should do relatively well in a lower performing economy because it's kind of that budget retail sale. Dollar General is what it stands for. So I'm pretty okay owning that anyway. So I don't have a ton of fear going into that one. And like I said, the volatility pump that was in both of those was really ripe for the picking. So, hopefully you're finding something that interests you out there in the market and you're able to find interesting plays. We'd love to hear about those plays that you put on. Otherwise, more news coming. The summer is kind of ending. The markets are kind of returning back to their more normal activity after Labor Day here. There's actually a pretty considerable amount of volume drop over the summer months. So that's really going to start picking back up here after this weekend, which is Labor Day weekend here in the United States. Symbolic end to summer. So good luck out there. Hope you have fun. And remember, think outside the block.